Okay, all right. Week 2 of this recording stuff thing. Still working on some kinks, but it'll be all right. Hopefully, this is recording my voice. I think it is because I clicked the right prompt, but I don't really know. I'll know when I'm done. So pre-week, I'm gonna go through a couple things. I'm gonna try to cut down the video sizes, honestly, because like most of that it can be reduced to something more like efficient. Instead of like 30 minutes of stuff, it could be like, I don't know, 10, 15, at max like 20 minutes, but I'll try to get through this as fast as I can, while being as concise as I can. You can see the time in the corner is 4:04 Eastern Standard Time. So market isn't open yet, but yeah, I wanna go through some things. So first off, yeah, I guess I'll talk about that. Okay, so there's a concept known as divergence, right? And if you were in South of Freedom, you know that P-Dub would talk about that aspect of the indices a lot. Like he would compare the ES, the YM, and the NQ, and it's like a whole thing, right? And ICT, that's one of his concepts, right? I mean, it is a concept in stock trading, but the way I use it or the things that I reference are all ICT based. I don't mean to offend anyone's trading disciplines, but literally his discipline is the only trading discipline that I know in depth. So I could speak on that. I can't speak on the other things. Okay, so something I noticed, right, is, let me turn the brightness up. It is up, okay. Is a 12-month chart, right? And a 12-month chart is basically like a yearly chart. Each candle is a whole year. So I was looking at the 12-month on a couple things, because I initially looked at a 12-month on the dollar, right? And I saw that we were basically trading inside of a breaker, right? This candle, we were trading inside of a breaker for like 1, 2, 3, 4, 5, 6, 7 years. So for 7 years, we've been in this breaker, right? Basically consolidating or accumulating. And we're building, that means we're building liquidity on both sides. So there's buy side, right? Like these equal highs, these yearly equal highs that we took out, right? There's these, and then there's liquidity under here, right? But, and this direction I have is if we seek out more buy side. I'm not really banking on this because higher this obviously means lower indices, but that depends on where we close this year, because this year isn't finished yet. Because there's been times where we poked outside the breaker, like these years, where we close inside, right? So if we don't close outside of this, I don't think we're gonna break the range of it. If we do close outside of it, then that opens up, filling this fair value gap over here and running into this bearish order block. And then if we have resistance here, then we're gonna come for these highs up here, right? And then even more, right, this gap, and then this bearish order block. So it's like the whole cascading. It's a lot, but that's what got me, because I was like, okay, I could read price at the 12-month scale. Like I thought it would be too little information, but like if you know ICT stuff, you know that this is a breaker, right? So I was like, okay, I wanted to look at other indices, and I saw that we have some form of divergence between them, right? So this is the NQ, right? Nasdaq futures, and we have this 12-month gap, right? From this month, these three years, right? They created a gap, and the NQ has retraced into that gap. Now the OTE isn't drawn traditionally. It isn't drawn from a swing low to a swing high. This is another ICT concept, but I'm not gonna go into that. But basically, the NQ has drawn down into this 12-month gap, past the 62%, and is like the low of it was close to 70.5, right? So we have the NQ dipping into this 12-month gap. Now in the ES has tapped the top of this 12-month gap, but it hasn't really dipped deep inside of it, right? It hasn't really dipped deep inside of it. So basically we have the NQ inside, the ES touching, so both of those have in common the fact that they have touched the gap, right? They have some form of contact with it. But the YM, right, it hasn't touched the let me erase the OTEs now, they're kind of in the way. I'll go back. That ruined my train of thought, but it's bugging me. 1 second. Okay, delete that. So NQ touched the gap, dipped inside. ES tapped the gap, didn't really dip inside, but it did touch it. But the YM hasn't touched the gap yet, right? Because this is the gap here from this candle's high to this candle's low, or to this candle's void. The YM hasn't touched the gap yet, so that's kind of like the. I guess you could say that as like the. Okay, so the ES and the NQ are in tandem. They're in line. They're doing what they've done. They've both touched the gap, but the YM hasn't touched the gap. So that would make the YM the divergent. Now, where to go from there, I don't know, because I suck with divergence. So, whoever's watching this video, right? If you are good with divergence, like of the three indices, please comment like what to do with the information, because I really don't know. And I can ask Peter, but I don't want to ask him just yet. I want to try to figure it out and brainstorm before I just reach out to him and ask him. But if it's too complicated, I'll just ask him. But we have the ES touching, NQ touching, but the YM hasn't touched. So just going off of what I think that means relative strength, because the YM between the ES and the NQ, the YM is the one that's normally like the last to move in a direction. So if it's the last move in the direction and they both touch the gaps, no, then that would mean it wants to go lower. See, that's the confusing part. I don't I don't know. But that was just interesting. Well, I think it was interesting enough to share. So if you're a divergent person, please, you know what I'm saying, help a boy out, because I don't really know what to go further with that information. I always get lost at that part, but that was something I wanted to bring to y'all's attention. And a couple other stocks have interesting 12-month charts, but those will probably be like last. Okay, so ES, right? Because I'm focusing on ES. Let's just go to the monthly, right? So monthly, we're back above the previous year's open, right? We did flush below that and below these equal lows here, these monthly equal lows. So we took some form of sell side liquidity, and then we retraced higher from that low, right? So that's kind of what we're doing here. Trend still, in my opinion, isn't bullish yet, but let's see where we go from there. So monthly, that's what happened. Weekly, we didn't take the final weekly sell side liquidity that I was looking for, but that's still not out of the cards yet, because I still do want us to come down into that monthly. Oh, it's not labeled. Hold on. Into that monthly. Jesus Christ. That monthly order block. I still want us to come down into that range, which would mean going below 35.96. That's still something I have confidence in. But this, right? This weekly range, we came into the range of this order block and filled this volume imbalance, right? This gap here, 2 candle gap from this candle's close to this candle's open. And then now we're actually reaching into the 3 candle, right, fair value gap. That is the wrong drawing tool. This, right? So we're now reaching into that. Daily, we have broken a swing high. If I go down, you can see like we have broken above this swing high, right? So we close above a swing high that took out sell side liquidity, because these lows here was sell side liquidity that was flushed, right? So this technically is a turtle soup long now. Close above this on the day, so that could be a break in market structure, right? Then we want some form of retest or whatever before poking higher, right? That's the daily look. But the weekly, that run higher, right? If you're bearish and you want us to continue lower, which would mean coming back below these lows, and then actually that I feel like the break below these would be the run into this monthly OB. So that's what I'm looking for. But the range that we're in, right, the weekly dealing range that we have is from this swing high to this swing low. So you draw your fib from there to there, from the swing high to the swing low. The equilibrium fib, just to show like the 50, and remember the 50 is right above this volume imbalance, right? So above, what is that? That's above 39. Let's just say 39.20 flat. Yeah, let's just say that. Let's just say above 39.20 flat. that would be technically a discount, a weekly range discount on a short, right? So above that is kind of where you would, if you were bearish still, is where you would want to look for a potential short opportunity, right? So that's the range that we're dealing with. And then we'll obviously be running up into this bearish order blocks range, right? So we're running up into that. And that is a 7% candle. So that's a almost 300-point candle, 296 points. So the half of that range is like, wait, where's that dot? Okay, the half of that range is like right here. And this candle's open. So the half of the dealing range, right, is 39.20. But then the mean threshold, which is the half of this bullish OB, is like 40.2250. So you really want to see how price navigates in between 39.20 and then this 42.25. So almost 100-point range. So this is just me because I've been working on a couple things with price, and this is me seeing if I can somewhat, not to predict, but just to project like the weekly range, like whatever the candle's weekly range is going to be, because the last week's candle's range was like 254 points. So I'm thinking this one might be around like, I don't know, 100 and something, 106, another 2% maybe. Yeah, because it's going to be dealing with the range of this fair value gap. Because then the half of that, right, it's a lot of halves in this. It's half of this, half of that, half of this. But then the half of this is also around, what is that? 39.75. So 39.20, 39.75, and then like 40.20. That's like the key price levels that I'm looking at as the week goes on, like as it goes on throughout the day, the days. That's the areas that I'm looking at weekly wise. If we do push really hard, right, if we just like get like another 6% rally on a week, that would mean we're pushing above this swing high, right? And if we're bearish, right, like as he says, if you're bearish and what you want to see is price respect up close candles, because given the correct criteria, those up close candles can factor or work as bearish order blocks, right? And we kind of explained this already, but it was kind of like okay, cool example. So I'll showcase this with green lines just so you're not confused. So we had this, right? These two up closes before expansion lower. We had the low of that was traded into here. You see, we came up to, we came down, then we came back up to it, sweeping liquidity, and then came down, right? Then we had another up close candle. That's not what I wanted to do, right? The bottom of this, boop. See, so we came up, and we came down, and we came up, and then we came back down, and then we came up above that to drop back down. So now here we are again with this area. And each time it came to the low of those candles, it didn't stop exactly at them. You see it had like some poke above, but not really any strong closes, right? Because we closed here, then we had this indecision candle, and the next candle closed back below. So don't look at these levels as like the second it hits here, it'll stop. It's probably not, because the wicks have to, reach and grab for stuff. Like this wick reached and grabbed to fill this gap over here. See that? Like this upward wick closed this gap. This push above this wick took the liquidity out of here. So remember, wicks will reach and grab for stuff. Wicks could go on forever. A wick could go for like 10%, and then the candle closes at like 2% or something. But that's its job. It's supposed to reach out and clear and sweep and grab whoever, right? So give it some breathing room, right? But that's kind of the same thing I'm looking for this week to happen. So what I'm really thinking is a bearish. Actually, I can't even say that because I don't really have a true bias. I'm trying not to do that, like put it in my head like I'm expecting this. I'm trying to be more fluid, not fickle, but fluid. So I know what to expect if something happens. But if it doesn't work out, then that's fine too, because you're not going to be right all the time. But I am expecting some form of rejection at this area to come back for these lows, because I don't think price is finished selling yet. Especially like all of SPY's, like the top 5 holdings and stuff, their monthly charts are like the same as SPY, right? Like if you look at tech or the main indices, right, all their monthly charts are like market maker sell models, like and they're not, most of them aren't complete yet. So that's why I don't think we're done yet. We might have, short little interval pops and stuff, but I don't think we're done selling yet, because I still want to see us run below 35.92 and into this monthly order block, which is like a 10% range or something. So okay, that's the weekly. That's it. That's kind of what we're looking for. We have those numbers, the numbers I said. Daily, you know what it is. Yeah, if anything, probably just more of a run to fill this void that we made with these candles. Gap here. There's like 3 gaps that we run up in. That's a lot of liquidity to fill. So we'll see how we move as we go up into that. Yeah, I think that's about it for that. On the ES, that's what I'm thinking. Drop higher to close lower, and if we don't close lower this week, then I would expect that next week potentially. Like if this week runs up hard and then consolidates for the end of the week, then I'd probably expect some selling to happen next week. But again, that's speculative trading, and that could be kind of stressful if it's not your personality, because if you're a person that considers too much, then sometimes you just end up like freezing and not knowing what to do, right? You have analysis paralysis. So to avoid that, try to be more of a reactive trader, but not reactive as in anything changes, you change your plan. Like you have a set, this happens or that happens, and then if this is what occurs, you do that. If that is what occurs, you do this. So probably something like that. Yeah, I think that's it that I have on the indices. I think that's all I have. Let me see if I can go and look at the 8-hour. Okay, nothing really. I still see I want us to draw up into like these areas. See what we get there. Yeah, that's kind of it with the indices, honestly. We could have a retest of this breaker, this 8-hour breaker, a bullish one, not a bearish one. Just this range of it. Yeah, so you can see what price gives us here. Because going from the last one low to what I would assume will be a swing high, because it doesn't have the 3 candles necessary, but you can make an inference, right? OTE would be back down into this area. I don't know if they'll take us back down there, but Jesus Christ. Even maybe not. It might just be around like this. It might not be this gap, this deeper gap. It might be into this gap. That's just OTE, but equilibrium. Okay, it's right around. It'll be in this. Okay, in that area. But see, again, I'm not even gonna put too much thought into that, honestly. If it happens, it does. If it doesn't, great. Okay, other things. What was it? Speculation plays. Okay, these are just things that all these tickers are just tickers that I analyze. I tried to do that to learn like high time frame bias and stuff. So I just ran through like this isn't all today. I did these like back in April, like most of them back in April and stuff. But for earnings, right? Like the most recent ones I've started doing. This one was a suggestion thrown to me by somebody, a guy named Toby, cool guy. Appreciate this, Toby, but it's basically a stock in a high time frame sell model, right? I'm not gonna explain what this is. ICT he explained it in the what was it called? He has a video on Forex. I think it's like the euro dollar. It's a sell model, and then he has one in the Hold on, let me find it. I'll pause. Okay, yeah, he has it. He mentioned them in this Market Maker series, volume 1 of 5. So all of these 5 videos, you kind of have to go through that and find that. But yeah, that's what the sell model is. So let me go back to this. Right, so it's just in a high time frame sell model. It's already shifted. It's already broken market structure, so it's bearish delivery. So I basically expect it to run below 52. So that's something somebody could look at. Not financial advice. I have to say that because it's not financial advice. I'm not a financial advisor. Trade at your own risk. I don't know the whole spiel, but I think that's just some of the basics. And I mean, most of y'all are like, responsible adults. So yeah, that's kind of what I was looking for with that. Then a couple others like Barnes and Nobles. It wasn't really much because they're earnings, and I'm not looking to play these. I'm just looking to see how they react with earnings, but it's not really worth going through. The one I was really looking at was Nike, right? Good old Nike. How it's been trading on a monthly, it came down into a monthly bullish OB, right? Let me delete this OTE. So it's in a monthly bullish OB. It's 3 down close candles before expansion higher, and I don't have the whole thing labeled because of that extra wick. I'm not really, because that wick has little volume, so I'm not really looking to mask all of that. Just mainly like the bodies of it, from the high to the lowest body. It came into the range of that, and then weekly wise coming into that, it had a little bounce, and I'm thinking that this is like a weekly break in structure, right, to run above this weekly high, because we had these 2 weekly lows, right, these equal weekly lows, and then this candle opened, and then the low of it cleared the liquidity under these lows, right? It turtle soup long, right? It's a fake break below a low. That's what a turtle soup long is, a fake break below a low. So something like this, like a quick wick or a long wick down, that's a turtle soup long. A turtle soup short would be a wick above a swing high or relatively equal highs or whatever. So we did that, broke structure, right? And then this retraced back down. I don't think this broke structure lower. I think this is like a RTO, which is a return to origin, which means that when we did this drop down and then we consolidated here for a little bit in this weekly range, a little bit, these 3 weeks, we had a base, right? At that point, we had liquidity on both sides. It ran one side of liquidity, the sell side, before running buy side. Then it would come back to where the origin, quote unquote, the beginning, the start of the move was, right? So that would be this area. So that's what I think this is. I think this is a run on sell side liquidity with an RTO and then a potential move filling this weekly volume imbalance, and then coming for potentially these equal high, because it's remember, it's earnings. I think their earnings is like Monday after market close, and we see what earnings could do, right? Look at Netflix. Right? So I'm thinking it might run above these equal highs at this 124, and that would be into a breaker. So that's kind of what I'm looking at daily on that. See, I have these 2 directions, the green one and the red one, right? Green one is up, red one is down, because technically on the chart there's liquidity on both sides, right? There's things that could take both ways. So if it breaks lower with earnings, I can see it coming down to like 90 something, maybe like high 90s, like 98, 97 or something. But if it doesn't do that and it goes in the other direction, then these equal highs up here at like 124 is what I'm looking at. It was Dave. Dave is the one who brought that to my attention. Thank you, Dave. So yeah, that's kind of what I'm looking at with that. But it's earnings, so again, it could be pretty scary because anything could happen. But that's kind of what I'm looking at on that. And I mentioned the 12-month charts, but I should have made note of what I was looking at. But I would recommend you all to look at, or whoever's watching this, to look at the 12-month charts on your tickers, because you might see something that might shift your bias from what just the monthly chart is showing you, right? Like with Amazon, right? You look at the monthly and it's like, okay, we consolidated and then we came down, but then on a 12-month, we came down to fill a gap, right? This fair value gap. The low of that was 101.79, and the low of this year is 101.26. So that gap is filled, right? So Could that just be a gap fill to retrace up higher? Who knows? But definitely look at the 12 months of some of your tickers. Even Nike too. See, Nike came down to fill this gap. If I were to draw a fib, right, on the bodies, that's this higher time frame. We're deep into an OTE, but if you were to use the wicks, then Nike hit an OTE on the year using the yearly chart. Because OTE was like, what is that? 105.30. So you could see this as just a bullish OTE on Nike before it comes for these relative equal highs, right? And if you look on the 12 month for a lot of these tickers, even though this year's candle, is down and all that, they all have these same relatively equal highs, right? Like even Tesla, it hasn't come down into its 12 month yet, but I could see that with the weekly liquidity that we have underneath here, like this 5 something. I mean, hey, that's a ways away, right? But I'm keeping it in mind because of all of this consolidation down here, and then that will put us into the range of the 12 month gap. But 12 month, even though the year's down for everything basically, they all have these relative equal highs. Every last one. Google, we're down, clean, relative equal highs. Berkshire, okay, never mind, that don't count. The steel company, relative equal highs, but that's all that. You could go through these and see that they're all relative. XLE, that already ran liquidity, and that's just a whole nother thing. But a lot of them have relative equal highs. A lot. Facebook, all of them. So, kind of rambling a little bit now, I'm not gonna lie. But I think that's all I had for the week. Not too much, like it's gonna go here, it's gonna do that. Just these are the numbers I'm looking at, and how price moves within them or around them. That is what I'll do, or that's how I'll react accordingly. Hopefully this was helpful. I don't know. But that's it. Enjoy your Sundays. That's all I got.